Depending on where you are in the world, good morning, good evening, good afternoon. My name is Bo Parfit. I'm one of the many team members here at DLP. We have an exciting program for you this evening. I'll highlight two of them. Don Wenner, our CEO and leader, has some terrific business and personal updates to share with all of you. Number two, former professional NFL player, author, and motivational speaker, JJ Burden, is here. He's fired up and he's ready to speak with us. We are going to start our program this evening with a few videos. If we can lower the house lights and start the video, please, that would be fantastic.
We really try to give every resident a wow experience, not only from just the initial application process, but the move-in process, and then of course once they become a resident, we want them to enjoy living here.
I've always been used to just like going somewhere to just pay my rent and that's it, or like paying it online. Here, anything that I need, I've been able to text them or even just call them and they respond super quickly. They're very, very accommodating to everything that we've needed so far. I feel at home, like it's only been a short time, but I feel at home here, especially coming to my apartment. It's just a nice, homey feeling. It's a warm feeling.
Ever since they took over, I've had nothing but nice things to say about them. The maintenance team is amazing. Usually when I have issues, the next day they're in my apartment fixing it. The ladies in the back office, if I ever have any questions, I can call them and ask them whatever I need, and my dog loves them. No, it's been nothing but good things since they took over.
I see people here that lived at properties that I used to work at, and they see my face here, and they talk about how much of a change the area is. The units look good. The curb appeal is improved.
The property has done a full 180 turnaround. We have increased occupancy from high 50s to almost 100% in a little over a year. Our financials are excellent. We are cash flowing, so we are operating as we should.
And we've all really just enjoyed it. Like I said, we've enjoyed being here in like a smaller town and just the people, like the Southern hospitality. We've never experienced that in Miami. So it's been such a nice feeling, and I'm really gonna miss it now when I leave.
DLP as a whole has been very good to myself and my family. We're all successful, and if we're not successful, DLP will find out a way to make us successful. I've never worked for a company that is as dedicated to their employees as their employees are dedicated to them, and it's definitely nice to get a attaboy, pat on the back, especially from all the way at the top. Don himself isn't afraid to shake a hand. He's not afraid to show his face. And it means a lot.
Prosper Orange Beach is a great example of DLP's impact in action. We've truly become a part of this community, and in turn, the community has responded.
We enjoy the staff. You can even just go sometimes into the office and talk with them. They're just like a friend. You can approach them and they help you. And they help you in things, sometimes it's above and beyond their own duties.
Everybody's just, so friendly, so everybody's in a good mood, positive. The energy's really good down here. Nothing bad to say about this place.
We do corporate leases, so it really helps people, that don't want to have to get a ding on their credit or can't afford a mortgage and a place to rent, so their corporation does it for them. We are a big part of everyone's lives, and we just try to make it one-on-one. We know their names, we know their pets' names, and we know what's going on in their lives.
Hurricane Sally really hit us rough. We had to replace all of the roofs.
We had, I think, 8 apartments that were flooded and affected.
The next day, we were literally out with the residents picking up limbs, and we went and got water because we were without power for a long time. We cleaned up everything in-house with our team and the residents, and it really showcased just the true spirit of community.
I was out until 2:30 in the morning, keeping the storm drains clear as best I could until about 3 o'clock in the morning. It just got too bad humanly to go out. So a lot of residents see me out there doing it. So you see the flashlight floating around, checking all the drains.
To see them inside the swimming pool, trying to clean it out, to taking people where they needed to go to get food for the day. You can't say enough about everything they did then. They're just awesome.
Despite having many challenges through COVID, this has been one of our best performing communities, and we've gone above and beyond helping connect our residents to help them through tough times and job loss. And in turn, we've been rewarded, and our investors have been rewarded as we've generated over 20% returns over our 3-year investment net to investors. All at the same time, while being able to invest in our great team, we've had team members develop and grow and really become a part of the DLP family.
I'm so glad that I landed here at Prosper Orange Beach, because I have looked around and realized that this particular complex really is and offers a lot. So I'm happy to be living on site, and I'm happy to be living in this area.
We went through COVID, we went through Hurricane Sally, so we've had a lot of obstacles, but we've really pulled ourselves together as a team and just tried to help our community and tried to help our residents as best we could.
And, it's kind of one of the places where everybody knows your name, and they're always glad you came, and that's what I think of when I come to Orange Beach. And I like the way that it feels when you come to the property.
It's just a great place. It's a happy place. I love DLP. It's a big goal of theirs is just, to help your community. And so we don't want to just be an apartment to live in. We want to affect your lives.
We're a business built on a calling. To constantly do right by others, to dream big and achieve bigger, to leave the world better than we found it. This is DLP Capital, passionately creating prosperity and making an impact by investing in communities. Each day, a common set of core values drives every team member to do more and be more for our company, our investors, and themselves. It's all about bringing your A game, no matter where you play. This passion matters, especially when it comes to being good stewards of the funds entrusted to us by our investors. It's our job to preserve and protect what others have worked long and hard to earn. Every DLP Capital Fund pays out preferred returns before we pay ourselves a management fee. Each is clearly focused with defined targets. All invest in desperately needed workforce housing, helping solve a growing crisis in our country. Perhaps best of all for our investor partners, they are geared to provide above-market returns. Regardless of the fund specifics, DLP Capital Funds have these common threads: doing good while doing well. If you are a high net worth investor looking to grow your wealth and build your legacy, all while having a lasting impact on the world around us, explore what DLP Capital Funds can do for you. Then join us on the journey from success to significance. Dream, live, and prosper.
For accredited investors who are looking for a fund that has a low investment minimum, fixed returns, and monthly distributions, DLP Capital offers the Positive Note Fund. The DLP Positive Note Fund is a real estate lending fund which provides 3% to 7.5% fixed returns. Investments in this fund are as note holders, and returns to note holders are paid prior to the equity members, which consist of DLP Capital's ownership team. This, in effect, provides a lower risk opportunity to investors. Note terms for as little as 1 year to a maximum of 5 years with 3% to 7.5% fixed returns based on the amount and term of the investment. The minimum investment is just $50,000 with the option to have all distributions paid monthly or grow and compound. Grow your wealth and build your legacy, all while having a lasting impact on the world around us with the DLP Positive Note Fund from DLP Capital. Dream, live, and prosper. If you're an investor who desires the rewards of investing, but also wants to keep risk at a minimum, consider the DLP Lending Fund. This mortgage pool REIT provides senior mortgages primarily for workforce housing assets to strong real estate operators. You have the benefit of liquidity with 90-day redemption period, which is great for qualified accounts such as IRAs and 401ks. Like all of DLP's REITs, the DLP Lending Fund qualifies for the Qualified Business Income 20% tax rate deduction. In addition, since the fund offers short-term loans, primarily 6 to 12 months, it offers a great interest rate hedge, meaning if rates go up, the fund benefits. The DLP Lending Fund is diversified through over 700 loans in over 80 markets and over 200 borrowers. The average loan to value is 55% and the average loan to cost is 72%. The average loan pays off in less than 1 year, with over 25% of all the loans paying off each quarter. Beyond those numbers, know that our borrowers are strong, responsible real estate operators with a 715 plus average credit score, over 3.5 million average net worth, as well as an average of more than 50 real estate deals completed and 500,000 of liquidity. All loans are first position senior loans backed by real estate. In addition, personal guarantees are typically required. The DLP Lending Fund returns are solid and consistent, providing an annual preferred return of 8% net to investors paid before DLP's management fee and targeted net annual returns of 9%. Grow your wealth and build your legacy, all while having a lasting impact on the world around us with the DLP Lending Fund from DLP Capital. Dream, live, and prosper.
If you are a high net worth investor interested in an equity investment fund that provides consistent monthly distributions, strong growth, limited volatility, annual liquidity, and significant tax shelter benefits, including unlimited qualified business income 20% income tax rate deduction, a significant real estate depreciation tax shelter, and the ability for the fund to do a 1031-like kind exchange within the fund. This $1 billion evergreen private REIT
works as opposed to the clinking on the glass. So welcome everybody. Here's the situation. We have about 300 or 400 people live right now on the internet. This is going to be a live feed, a live stream. So we have people right now online from probably all over the world. And we're gonna, as soon as everybody gets, in their seats, we're gonna start the show. So if we could maybe dim the house lights a little bit, that would be great. But we're probably gonna get started in about 2 minutes. Thank you, everybody.
is structured to make equity investments in workforce housing communities in primarily secondary and tertiary markets in the Sun Belt region. This strategy is to provide safe, clean, affordable housing communities to the 250,000 residents through 100,000 affordable workforce housing units that are and will remain affordable to the local workforce, while providing these families with a path to prosperity. The Dlp Housing Fund provides investors with targeted 6% annualized preferred returns, paid before DLP Capital's management fee, and 10 to 12% targeted annual returns. The preferred return distributions have the option of being paid monthly. Grow your wealth and build your legacy, all while having a lasting impact on the world around us. DLP Housing Fund from DLP Capital. Dream, live, and prosper.
But we really try to give every resident a wow experience, not only from just the initial application process, but the move-in process, and then of course once they become a resident, we want them to enjoy living here.
I've always been used to just like going somewhere to just pay my rent and that's it, or like paying it online. Here, anything that I need, I've been able to text them or even just call them and they respond super quickly. They're very, very accommodating to everything that we've needed so far. I feel at home, like it's only been a short time, but I feel at home here, especially coming to my apartment. It's just a nice, homey feeling. It's a warm feeling.
Ever since they took over, I've had nothing but nice things to say about them. The maintenance team is amazing. Usually when I have issues, the next day they're in my apartment fixing it. The ladies in the back office, if I ever have any questions, I can call them and ask them whatever I need, and my dog loves them. No, it's been nothing but good things since they took over.
I see people here that lived at properties that I used to work at, and they see my face here, and they talk about how much of a change the area is. The units look good. The curb appeal is improved.
The property has done a full 180 turnaround. We have increased occupancy from high 50s to almost 100% in a little over a year. Our financials are excellent. We are cash flowing, so we are operating as we should.
And we've all really just enjoyed it. Like I said, we've enjoyed being here in like a smaller town and just the people, like the Southern hospitality. We've never experienced that in Miami.
Please put your hands together for our CEO, our leader, Don Winter.
All right, good evening, everybody. Can everybody hear me back there? All right, excellent. So welcome everybody here to beautiful Casa Monica. Thank you to the many online with us. Sorry for a little bit of late start for those online. So we're gonna get in, as Bo said, I'm gonna kick us off here tonight for everybody live. A little bit of an overview of the 2 new investment funds and some other exciting changes that we're launching here at DLP. Then for everybody here live, we're going to take a little break from presenting. You guys are going to have dinner. Then we've got JJ Bearden, phenomenal speaker, to wrap up our night here this evening. For those of you online, you'll be able to ask questions to Rich and Larry for all the exciting things we're going to talk about here. Grab a bite yourself and rejoin us around 7 o'clock for the keynote speech tonight. So with that said, I'm going to dig into our dinner presentation here on impact investing. And that's our little Barry disclaimer, as we like to call it, our general counsel. This is our leadership team here at DLP, many of which are in the room with us here tonight, who drive all the results, including this event here tonight. I'm really pleased to have this incredible growing team. Why don't you guys stand up here briefly and get acknowledged here from our investors and operators. Go ahead, stand on up, stand on up. You got a few of them here. So for those of you, hopefully everybody here live with us tonight know who I am, but anybody online who might be with us the first time, my name is Don Winter. I'm the CEO and founder of DLP, started the company over 15 years ago now in Bethlehem, Pennsylvania, although we now call St. Augustine home, which is where we're at here live tonight. Since then, I've had the pleasure and honor of representing a lot of great investors, clients, and having now closed over 20,000 real estate transactions, over $5 billion, including over $2.5 billion as an owner, as an investor, and another $2.5 billion as a lender. And those are the two things at the core of what we do here at DLP. This past year, I published a book called Building an Elite Organization, which I'm proud and honored to say has been top bestseller on Wall Street Journal, USA Today, Amazon. And in the book itself, what's so exciting about it is the book is about how to scale a company. And that's what many of the people in the room here are here for tonight. We have a mix of room tonight of those who are invested with us, coming here to focus on living and leaving a legacy. And then a lot of the room here tonight are active real estate developers, operators, builders, focused on building great companies, many of which brought some of their leaders and their organizations here with us tonight. And I want to illustrate kind of the value of what we're building here together, what this room's building together, what we're all a part of. So some of you may know I've been working on adoption for some time. And I've been working with an agency called Christian Family Services out of Gainesville, Florida. And I'm in a waiting, adopting family. And so they called me kind of out of the blue on Monday. And of course, when your people at an adoption agency call you, you're pretty excited, right? And the first thing he says to me, his name's Jerry, says, "Don, I don't have a baby for you." And I said, "Okay, well, how can I help you, Jerry?" And he says, "Don, I have two moms who are both expecting. Both are in pretty terrible situations." He said, "One is living out of her car. She's 6.5 months pregnant. She's got a drug addiction, and she's living out of her car right now. And she has been for weeks. We can't find her anywhere to live. We can't find her something subsidized or unsubsidized, because we're even willing to pay rent. We can't find anything affordable for her to live in. There's just nothing. We can't get people to call us back. When we try to get a hold of a management company, and we do, there's nothing available. We can't find anything." And we got another mom, and maybe an even worse situation, because she has 3 young kids who are 1, 2, and 3 years old and is pregnant. She's living with a friend in a house and all the people living in the house other than this young lady are addicts, and they're all about to be evicted on Monday from this house they're living in. He says, "I don't know what else to do. This is completely abnormal for us, but I'm calling on you because I know and I've heard that you're focused on this affordable housing crisis, and figured if anybody could help, you could help. And it's a long shot, I know, but we're really in desperate situations." This was at 7 o'clock on Monday night. And so I was with my wife, and we were at home and talked about it briefly, and I said, "All right, let me work on this a little bit." So I literally text one of our elite operators, one of the operators who we work with, who we fund, who partner with, who come to these events here with us. And I don't own anything in Gainesville today that would work for these people. I don't have something I could provide to them. So I recalled, how we actually did put a property under contract in Gainesville this past year, an 80-unit apartment community, and one of our lead operators wanted to buy this property as well, but the seller awarded it to us because they were more confident we'd be able to execute and close and so forth. But we knew that our operator really wanted to buy this property, so we actually assigned our contract to this buyer, to this operator, to one of our borrowers. Instead of us buying it, we gave him a loan for him to buy it. So we don't own it, but we gave him the loan, and we actually are the ones who found the deal and turned it over to him. So I text the operator, and I said, "Hey, do you have anything available at that property in Gainesville?" And he said, "Let me check." This is at 7:30 Monday night. Text me back 10 minutes later. He says, "I just got a hold of the manager. We have 2 units available." I said, "I'll take them both." So then I explained the details to him that what the situation was. That's not easy either, right? For him to agree to accept 2 moms who have no income in pretty tough situation, at least one of which has a drug addiction issue, right? I did say I'd guarantee the leases, so I took away his financial worries, but still that's out of the norm, right? So he agreed to accept them, and we're going to have both moms being able to move into these properties at worst on Monday. And so my wife said, "Wow, who else could have done that? In an hour, let alone, right? After they were weeks looking for a property." And what was cool is that that's probably true. It's probably the only person they could have called, but it's not because of what we do. We don't own any properties there. It's this network we've created. And we have so many other incredible people who are focused on making an impact here alongside of us. And that's what we're here to talk about tonight, is making an impact here together. What's really cool is how the Lord works. So we've been working on adoptions for about a year. We got approved March 29th of this year, went through home studies, went through all these classes, finally got approved March 29th. Had not heard one single word from the adoption agency other than these phone calls this past week. Yesterday at 4:45, I was finishing a meeting with actually these gentlemen here at our front table, and I get a phone call from Jerry, and I'm thinking it's something about these leases. So, "Hey, Jerry, what's going on?" And I start proceeding to give him an update on what's happening. There's a lot of logistics going on here. And he says, "Don, that's not what I'm calling to talk to you about." He said, "I have a surprise for you." He said, "I have just got a call from a mom here in Jacksonville who gave birth 10 days ago. It's a safe haven baby, which means she left the baby at the hospital. And I'm heading up there right now, and I'm going to call you when I get there. If you're interested, you have you come up here tonight, and you'd have to take the baby home tomorrow. That was last night. So I wasn't sure exactly what would happen. So proceeded. We had a dinner plan. There were 30 some of us last night at Columbia. So went out to dinner. I told kind of everybody, at least near me, that I might have to be rude and step out and leave. So of course, right after we ordered dinner, I got the phone call that yes, this is going to happen. Please head up here. Headed up there last night, and about an hour and 30 minutes ago, I brought home Jacob. It's amazing how things work, right? I mean, maybe if I didn't help out that situation this past week, maybe this still would have happened just the same, right? But it's just amazing when you do good and you focus on making an impact, what happens, right? So with that said, I'm going to apologize to all of you that after I'm done with my presentation tonight, I'm taking off and heading back home, as I got to spend about 15 minutes with my two older sons and our new brother before I had to rush out here this evening. So with that said, I'm going to dig in here a bit. And then allow you guys to dig into dinner. So we are now DLP Capital. You might be thinking, haven't you always been DLP Capital? No, we were DLP Real Estate Capital, and then each of our business lines at DLP went by a different name: DLP Lending, DLP Property Management, DLP Realty, etc. So we rebranded. We're in process. You'll see some things still straggling out, but rebranding ourselves as one company, one focus, which you're going to hear about tonight, DLP Capital. At DLP Capital, we're now one company with everybody, 450 full-time team members at DLP now, all working together to make an impact. An impact now that we've actually mandated on ourselves, which I'll explain. And that's really what we're launching here tonight, which is that now all of our investment funds at DLP are impact investment funds. We've self-mandated that everything we do, all of our funds are going to be focused on making an impact. An impact specifically on a few things. The most obvious is what I just talked a little bit about, the workforce housing crisis. We're focusing that at least 85% of all the investments we make in each one of our investment funds, including the two new funds we're launching tonight, are mandated to make an impact on the workforce housing crisis. And we have some unique ways that we've mandated that I'll talk about here a little bit tonight. So with that said, I'm going to play this little video to kick us off. We're working on audio here. That's our new headquarters. I'll be illustrating here if we don't figure this out soon. Narrating, yes. Can't get these working.
This is DLP. We're a business built on a calling to constantly do right by others, to dream big and achieve bigger, to leave the world better than we found it. This is DLP Capital, passionately creating prosperity and making an impact by investing in communities. Each day, a common set of core values drives every team member to do more and be more for our company, our investors, and themselves. It's all about bringing your A game, no matter where you play. This passion matters, especially when it comes to being good stewards of the funds entrusted to us by our investors. It's our job to preserve and protect what others have worked long and hard to earn. Every DLP Capital fund pays out preferred returns before we pay ourselves a management fee. Each is clearly focused with defined targets. All invest in desperately needed workforce housing, helping solve a growing crisis in our country. Perhaps best of all for our investor partners, they are geared to provide above-market returns. Regardless of the fund specifics, DLP Capital funds have these common threads: doing good while doing well. If you are a high net worth investor looking to grow your wealth and build your legacy, all while having a lasting impact on the world around us, explore what DLP Capital funds can do for you. Then join us on the journey from success to significance. Dream, live, and prosper.
All right, thank you, Kyle. So that sets the stage a little bit to the changes that we're doing here tonight. I'm going to walk you through, and after we finish up tonight here, we have some handouts for those of you who want to be able to see everything we go over with the new funds. They'll all be on the investor portal by tomorrow that many of you are used to. You can get into all the details. But I'm going to walk you through and play a little video and help you understand the 2 new funds we're launching and how they play in with the 3 existing funds we run at DLP.
We're a business built on a calling.
All right, guys.
To constantly
new venue
do
here tonight. All right. So, all of our funds here, I'm going to walk you through some of the highlights here. So every fund we run at DLP are Evergreen Funds. So we're launching 2 new funds that are also Evergreen, meaning all of our funds are open-ended funds that we plan to operate for the next 3 years, 5 years, 10 years, even decades. So we really feel after the launch of these new funds that it's not going to be likely that we launch another fund for quite a number of years, which is what makes today pretty significant. We've launched 2 funds in the last 3 or 4 years. We're launching 2 tonight. All of our funds, as mentioned in the video, all focus on workforce housing. We focus on providing housing that's less than 30% of the area median income, which is what we deem to be affordable for the local workforce. All of our funds are targeted to provide the kind of returns many of you have come to expect, double-digit, consistent returns. All of our funds pay out preferred returns, meaning we pay you out significant distributions before we even earn a management fee. So let alone earning profits, we don't even earn our management fee in any of our funds until you earn a preferred return on your investment. One of the coolest things we've been working on, and luckily for all of us, Bob Peterson, our CFO, is on a cruise right now, a much-needed cruise in Europe, because I don't think we would have got this across the line if he was here tonight, because he's fought us on this a little while, because what I'm about to present is a lot of work for our accounting team. So we're introducing Auto ACH. And what I mean by that is we have a lot of our investors today who are generating more income, whether that's from their jobs, their businesses, or even from their investments, than what they need to pay their living expenses. And what a lot of investors we find do is they build up cash for a while in their bank account, and then they come to us and say, hey, Don, or Larry, you're rich, hey, here's $100,000, here's X amount of dollars. But they have all this cash sitting for weeks, months, even in some cases years. We talk to some investors who you kind of forget about it. They built up cash and it sits there. So we've created a model where we can work with you to go about figuring out an amount that works for you that will automatically get added to your investment account each quarter. So you figure out what that amount is to you. You can change it anytime, but it's a way that you'll automatically grow your wealth without having to give it a lot of thought, give it a lot of effort. We've modeled this out, which we'll go over with many of you, where with a simple approach of a simple auto reinvestment each quarter, you'll have your investment quadruple in under a decade, just through a simple, modest addition to your account every quarter, set up on autopilot. So something we're excited to talk with a lot of you about. Many have been asking us to do this for a while. This just gives you a little illustration how much more capital you have. You just put a little bit of money, a few $1,000s on an auto reinvestment every quarter, how much money you have, more you have in a decade through that consistent reinvestment and compounding effect. All right, so I'm going to walk you through here very briefly, about 2 or 3 minutes at most, on each of our 5 investment offerings. I'm going to first start with the 3 funds that we already run and operate today, and many of you are invested in, and then I'm going to introduce the 2 new funds. So first up is the Dlp Housing Fund. This is a real estate equity fund. It's a REIT, public REIT structure, which really what that means is a tax election. That means it's very tax efficient. What we invest in here is equity into existing multifamily communities predominantly. Now, with the help of our partners here in the front of the room, we now own over 10,000 apartments in this fund, over $1 billion in assets now in this fund that we just launched January of last year. This is the fund that buys all of our existing housing communities producing consistent monthly cash flow. And play a little video to explain the Dlp Housing Fund.
If you are a high net worth investor interested in an equity investment fund that provides consistent monthly distributions, strong growth, limited volatility, annual liquidity, and significant communities to the 250,000 residents through 100,000 affordable workforce housing units that are and will remain affordable to the local workforce, while providing these families with a path to prosperity. The DLP Housing Fund provides investors with targeted 6% annualized preferred returns, paid before DLP Capital's management fee, and 10 to 12% targeted annual returns. The preferred return distributions have the option of being paid monthly. Grow your wealth and build your legacy, all while having a lasting impact on the world around us. DLP Housing Fund from DLP Capital. Dream, live, and prosper. If you are a high net worth investor interested,
you'll notice I said we now own over 10,000 units in this fund. Our target's 100,000. So we still got quite a bit of work to do, hence why we're having this dinner event here tonight. So here's a highlight of what Larry just said in the video. Double-digit returns, annual with monthly distributions and annual liquidity. Traditionally, with all of our income we distribute, sheltered from tax through depreciation. So vote for Larry if you like the DLP Housing Fund. Next up here, we have the DLP Lending Fund, which is our longest standing fund that we've been running at DLP, over 7 years now. This is the primary fund that we make loans to many of you in the room here. This is a fund that makes first position mortgages backed by real estate, predominantly, again, workforce housing. So Rich is going to tell you a little bit about the DLP Lending Fund.
If you're an investor who desires the rewards of investing, but also wants to keep risk at a minimum, consider the DLP Lending Fund. This mortgage pool REIT provides senior mortgages primarily for workforce housing assets to strong real estate operators. You have the benefit of liquidity with 90-day redemption period, which is great for qualified accounts such as IRAs and 401ks. Like all of DLP's REITs, the DLP Lending Fund qualifies for the Qualified Business Income 20% tax rate deduction. In addition, since the fund offers short-term loans, primarily 6 to 12 months, it offers a great interest rate hedge, meaning if rates go up, the fund benefits. The DLP Lending Fund is diversified through over 700 loans in over 80 markets and over 200 borrowers. The average loan to value is 55%, and the average loan to cost is 72%. The average loan pays off in less than 1 year, with over 25% of all the loans paying off each quarter. Beyond those numbers, know that our borrowers are strong, responsible real estate operators with a 715 plus average credit score, over 3.5 million average net worth, as well as an average of more than 50 real estate deals completed and 500,000 of liquidity. All loans are first position senior loans backed by real estate. In addition, personal guarantees are typically required. The DLP Lending Fund returns are solid and consistent, providing an annual preferred return of 8% net to investors paid before DLP's management fee and targeted net annual returns of 9%. Grow your wealth and build your legacy, all while having a lasting impact on the world around us with the DLP Lending Fund from DLP Capital. Dream, live, and prosper.
All right, thank you, Rich.
If you're an investor who
this is the fund that predominantly, again, is making loans to investors in this room, to the operators in the room. And those stats Rich just highlighted is our average borrower. The quality of the borrowers we're really focused on today, those in the room, are even higher. These are individuals who are high net worth investors in and of themselves, significant backgrounds, significant experience, and many are employing. Some of our borrowers in the room tonight have organizations nearly as large or as large as DLP. High quality operators that we're able to partner with and fuel their business through bridge lending. Here's the highlight of all the returns that Rich just mentioned. Historical returns over 13% over the past 7 years, net to investors, everything distributed monthly, and 90-day liquidity. All right, so last fund that we currently have open, that's still open for investors, is the Positive Note Fund. This is a fund that also makes loans to the real estate investors in this room. The difference here is that instead of you being a partner in the fund that makes loan, you're actually making loans to the fund. You're actually a fixed return note holder. And what's great about this strategy is that you get fixed returns that are guaranteed by DLP each and every month, the option of taking distributions monthly, letting it reinvest, and you know exactly what your returns are going to be in the lowest risk position of all DLP funds.
For accredited investors who are looking for a fund that has a low investment minimum, fixed returns, and monthly distributions, DLP Capital offers the Positive Note Fund. The DLP Positive Note Fund is a real estate lending fund which provides 3% to 7.5% fixed returns. Investments in this fund are as note holders, and returns to note holders are paid prior to the equity members, which consists of DLP Capital's ownership team. This, in effect, provides a lower risk opportunity to investors. Note terms for as little as 1 year to a maximum of 5 years, with 3% to 7.5% fixed returns based on the amount and term of the investment. The minimum investment is just $50,000 with the option to have all distributions paid monthly or grow and compound. Grow your wealth and build your legacy, all while having a lasting impact on the world around us with the DLP Positive Note Fund from DLP Capital. Dream, live, and prosper. For accredited investors.
All right, so now I know what everybody's waiting for, the new funds. So thank you for that, Rich and Larry. So we're launching 2 new funds here tonight. Surprise, they invest in workforce housing. We're doing it a little bit different in these 2 new funds. So first up is the Preferred Credit Fund. This is a fund similar to the lending fund that makes short-term bridge loans to real estate investors. The difference of this fund is, number one, not all of the loans are going to be first position mortgages. Some of these loans will be in a second position, mezzanine, a subordinate position to a first mortgage, which may even be the DLP Lending Fund or DLP Positive Note Fund. To give us the flexibility of growing the relationships we are able to provide to our very best operators. The average borrower of this fund is going to invest significantly more money in the property and generally going to be much larger quality assets, which I'll explain here in the video here in a quick moment. And I had the pleasure of doing the new funds here, so I'll tell you a little bit more here.
How does lending capital to the most experienced and strongest borrowers sound to you? How about having significant equity, typically 7 figures, invested behind the loan sound? This is exactly the focus of the DLP Preferred Credit Fund, lending preferred credit to the best real estate operators, developers, and builders. As DLP Capital continues to work on making a positive impact on the affordable workforce housing crisis in America, this fund provides capital to our highest quality borrowers who share our focus on making an impact and are scaling through DLP Capital's elite execution system. The DLP Preferred Credit Fund originates real estate-backed second position, mezzanine, and subordinate loans in addition to first position loans, all in a preferred position to significant equity invested behind the loan. The fund is able to provide this more flexible capital to DLP's best borrowers while achieving the highest targeted preferred return of any open DLP fund at 9%, paid before DLP's 1% management fee. The preferred return has the option of being distributed monthly. The fund has an overall annual return target of over 10% net to investors. In addition, the fund provides liquidity with a 90-day redemption period. The fund is an excellent option for qualified accounts, including IRAs and 401k plans. In addition, like all DLP funds, you'll receive the 20% reduction in your income tax rate via the qualified business income deduction. Grow your wealth and build your legacy, all while having a lasting impact on the world around us with the DLP Preferred Credit Fund from DLP Capital. Dream, live, prosper.
So in short, I could argue here.
How does lending capital?
If I had the time to tonight, I could argue with you that this fund is actually a lower risk position than our lending fund because of the quality of the borrowers that we're lending to. But some would say, being in a subordinate position, that this is a higher risk opportunity. In turn, we're targeting higher returns in this fund. In short, we expect to generate 1 to 2% higher returns in this fund versus the DLP Lending Fund. And I know none of the real estate operators in this room are going to be interested in knowing about how we can provide them with a subordinate debt here on upcoming deals. I know that'll be a hot topic tomorrow at our meeting. So double-digit returns distributed monthly with a 9% preferred return before we earn anything, and 90-day liquidity, just like the DLP Lending Fund. All right, last but not least is the DLP Building Communities Fund. So most people know at DLP that we own workforce housing communities. We own existing communities. That's mainly what we talk about, going out and buying communities built in the 1990s, 2000s, et cetera. That's predominantly what you see. That's predominantly what we've invested in over the years here in our investment funds. But while we've been doing that and operating our strategy of buying existing apartment communities, we've been developing communities as well at DLP. But up until this point, I've done all of the development of both multifamily communities as well as single-family build-to-rent communities, historically all from my own equity. We have never opened up this vehicle to investors. We've had the question a lot of times, but we wanted to first build out the team, build out the infrastructure, build out the experience, the track record, the know-how to be able to go out there and start taking capital into ground-up development. And with where the market has gone, especially since COVID, and this unbelievable undersupply of housing, we determined it was time that we ramp up our focus on building ground-up communities, because that's the key to us solving this crisis. Whether even those building workforce housing or building any apartment communities are critical to us having more supply of housing. That's the only way we're going to avoid seeing rents continue to climb double digits in most markets right now, is to build brand new communities. So we're doing this today in Central Florida, here in Jacksonville, in Bethlehem, Pennsylvania. We're building ground up communities right now, working on a lot of deals to fill in this pipeline up with 3-story, 4-story multifamily communities, again, single family communities built for the purpose of rent, and even some mid-rise communities such as the Boyd Theater in downtown Bethlehem that some of you know that we're working on right now. We're going to do all that here in the DLP Building Communities Fund, ground up communities. This will be equity investment position as a partner with us, just like the DLP Housing Fund. But again, instead of investing in existing cash flowing communities, we're going to build ground up communities at a favorable basis where we're going to be able to generate a much higher return than we can generate buying existing assets in this incredibly competitive market we're in today. So let me play a little video here to explain more.
If you're an investor interested in an equity investment fund that provides high returns and tax shelters, but less concerned about liquidity and monthly distributions, the DLP Building Communities Fund could be a strong option to consider. The DLP Building Communities Fund is an equity investment fund with a focus on the development of new workforce housing communities. Its primary strategy is to positively impact the workforce housing affordability crisis in America through the development and construction of new communities that are affordable to the local workforce and contribute to the increase in supply of housing, which is the key to keeping rents from soaring out of the range of affordability for local residents. These communities will be developed primarily throughout the Southeast in secondary and tertiary markets where the demand is the greatest. Unlike DLP's other funds, this fund does not focus on current income, as the majority of the investments are under construction and not yet producing income. In exchange for not receiving current income, the fund targets higher returns due to the ability to build new housing at significantly higher yields than current market values provide. Of all the DLP Capital Fund offerings, the DLP Capital Building Communities Fund has the highest targeted returns with a 13% annual targeted return, which includes a preferred return of 8%. In addition, the fund will offer significant tax shelters through depreciation. Grow your wealth and build your legacy, all while having a lasting impact on the world around us with the DLP Building Communities Fund from DLP Capital. Dream, live, and prosper.
Right, so thank you everybody for patience here as I go through all these offerings. We're going to hand you out tonight an overview that'll give you a comparison of all 5 of these funds, how they stack up across all the important criteria, and walk you through everything we went over tonight. Of course, many of you existing investors and prospective investors, that's a lot, understanding 5 different offerings, what's best for you. And of course, that's what Larry, Brett, Rich, Bob, Mike are here for, is to meet with you, go over, figure out which of these funds can make the best sense based on your goals, based on what you want to achieve over the investment period ahead. Again, to recap here, every one of these funds, all 5 of these funds now are mandated to be impact housing funds. So the 3 existing funds you'll see now, we're launching effectively today, but it'll come out tomorrow, updated investment documents for all of our funds, laying out our mandate on making an impact, also updating some of the key details to the strategies and historical performance of these funds. So all 5 funds have updated investment documents, which will all be available, if not already today, by tomorrow morning on the investor portal. And we look forward to digging in further with each of you on these investment offerings, figuring out what can make the best sense for you and your family. I'm not going to go over here due to time tonight, run a little behind the comparison of the funds, but again, this will be in your handout here and online as well, where you can go and compare each of these funds. What do they do? What's the risk profile? What's the return profile? The income? What are the benefits, liquidity for you to consider? So with that said, as I wrap up here tonight, normally this is what we would do, is get into Q&A. For everybody, for the hundreds of you joining us online, thank you. Rich and Larry are here, and they're going to be taking your questions live, answering them, I guess I should say live virtually. Everybody here, we're going to have dinner instead, so you have an even better opportunity than having us answer questions. You guys have dinner, and then have JJ Bearden come up here in a couple minutes. I appreciate everybody's time. I unfortunately won't be able to talk to all of you here tonight as I'm taking off to go see Jacob and support my wife. All of you real estate operators, I will see you tomorrow as we dig in and focus on scaling our businesses. So thank you, everybody. Appreciate it.
If I can just get a show, let's see if everyone can hear me. Let's see. Larry, are you able to hear me? All right, Larry gave me the thumbs up. So if you can go ahead and type your questions into the chat box, we will start answering them. We saw a lot of them coming through. So let's address the DLP Lending Fund, because I think that's the hot topic for most in terms of the change for the preferred return, which is now 8% and a targeted return of 9%. That is the target. The intent is, and we fully expect that we will continue to hit, very good returns, double-digit returns, and so what you'll actually receive from your returns will be the same, or should be the same, as we have been delivering for the past, 7 years now. So again, these are targets. The preferred return gets paid on the 1st of the month, and then the excess gets paid in by the 20th of the month. So again, you'll still get your full distribution monthly. So the differential is really maybe a little bit in timing from preferred to the excess, but you'll still be generating the same type of returns. If you are dissatisfied or unhappy with those particular returns, or again, just with the overall changes made, by all means, the beauty of the lending fund is the liquidity, right? You have 90-day redemption, so you can always redeem out and move into another fund, or redeem out and take your investments entirely. But again, part of this is, as we add the new funds, right, we're structuring sort of a ladder. So you have your positive note fund, which would be the lowest returning, right, from 3 to 7.5% return, with then your lending fund stacked then next to the preferred credit fund, the housing fund, and then the building communities fund will be the highest returning fund. So again, you still have the options to get into any of the funds you want to be in and get the type of returns that you'd like to attain. So I'll take other questions. Handouts. All of the tear sheets for every single fund that we presented tonight, the fund comparison, all of that will get uploaded into Juniper Square with all of the updated PPMs, operating agreements, subscription agreements. So you'll have access to all of those. We will be sending links to them, and we will be sending you the comparison and the tear sheets. And then let's see, so White Coat, how will you decide if a first position loan goes to the lending fund or preferred credit fund? So again, there will be, again, differences in how the loans are structured. So every loan in the lending fund will be a first position loan, to your point. There may be some first position loans that do go to the preferred credit fund, and that may be because of the tier of the borrower. And that borrower may have a higher tier, and there may be preferred equity behind it. So again, a lot of that will be based on how the loan is structured, and again, what equity might be without behind it. All right, welcome, Rafa, Natalie. Are the new funds Florida or PA corporations? Florida. Let's see, in the housing fund, there's a 6% monthly return with a 12% target. When does the additional 6% reach the investors? So Dennis, Good question. So monthly, the 6% gets paid out, so a 0.5% dividend every month, and then all excess above the 6. Again, still targeting a 10 to 12% return in that fund. That all gets paid out at the end of the year once we do the valuation. So typically that's going to happen in March, but it is retroactive to the beginning of the year, so you get your full return, and it accrues for the whole year. Last year, that return was 13.7% if you took your 6% distributions. If you reinvested them, which is the norm, most people do through our DRIP program, that return was a 14.5% return for 2020. So again, we get into the why was the target return. So again, if you think about it, the target return for the lending fund was 10%, and that target was lowered to 9. The preferred return was lowered to 8, but again, you're still going to get paid all of that in the entire month. And it was done because we're stacking as we're introducing the new funds. We now have a laddering of different returns, right, based on the profile of the underlying collateral. So starting again with that positive note fund, lending fund, positive credit fund, preferred credit fund, the housing fund, and then the building communities fund. So are these funds open for 1031 exchange? So David, they are not. Today, we do not have any funds that we can take 1031 exchanges into directly. We are working on potentially a Delaware statutory trust or another option to be able to do that. The benefit within the housing fund and the building communities fund is that within those funds, if you're an investor, we do 1031 exchanges within the fund, which helps us defer those capital gains out within the fund so you can decide when you want to take those capital gains. Let's see, any others? Matt Avila, what happened to the Income and Growth Fund? So the Income and Growth Fund is not closed. It is still a fund that has investments in it. We're no longer taking new investments into the Income and Growth Fund. However, it's still in there. The assets are still in there. It'll continue to pay out, but it is no longer a fund that we're offering for new investments.
And Rich, Amar had a great question as far as what does DLP plan to do if Congress passes the new bill that would eliminate QBI deductions and then therefore effectively decreasing returns since core would be taxed?
Sure. So again, we can only control what we can control. And so there is a great benefit today of having that additional 20% tax rate deduction for the qualified business income. Again, nothing we can do if they were to repeal that. We'll continue to provide great returns without that additional 20% tax break. The housing fund and the business communities, building communities fund will continue to get the depreciation, right? So that is the biggest tax savings within the different funds. Last year, the housing fund sheltered 100% of all the income with the depreciation that was generated. So again, those are not expected to go away. And quite frankly, we don't expect, the QBI to go away either. I mean, it could happen, but the probability of that is probably still low. And again, there is, again, I think it's Jim or Brett on White Coat says the new bill doesn't eliminate the QBI deduction. It just limits the total amount, 400,000, 500,000 if married. So again, there'd be limitations and potentially phase outs. All right, Kareen, welcome. And does the ACH program allow you to allocate by quarter if you're invested in multiple funds? Yes, absolutely. So again, you can set it up so that you can reinvest and continue to add additional funds every quarter into the different funds that you'd want. So again, you can kind of split that up between the different funds. Do you need to be a qualified investor? All of our funds do require investors to be accredited investors. So distributions, the Building Communities Fund will have an annual redemption, but no monthly or quarterly distribution. That is correct. The distributions in the Building Communities Fund will be annual distributions. And again, primarily because of the fact that these are not going to be cash flow generating assets in the inception, right? Most of this is going to be ground up construction of new multifamily communities. So again, the distributions will be on an annual basis. So the percentage, there isn't any specific percentage that is targeted at this point for non-first position loans. The fund is capable of making 100% theoretically of non-first position loans, but that wouldn't be the case. Any information on the prohibition of IRAs from investing in private placement securities? We have been monitoring the situation, continue to monitor it. Again, there hasn't been much else. We continue to work with our partners. And again, we had today at our Prosperity Builder event, we had a trust attorney, we had an accountant, all who again went through some of the potential ramifications. However, the expectation is, that it's going to take a lot to pass through. And again, the phase out, right, wouldn't be effective. If it went effective, it would be 2021, but wouldn't go out until after 2022. So again, they're going to give everyone the ability and the time to make any necessary changes if the bill does pass. Are there any minimums for the ACH program? Can ACH withdrawals be made as well? So we are doing a quarterly minimum. And again, for setting these up, and again, you can, I believe the minimum is going to be around 10,000, but we will confirm that for you. But again, we're looking to make it substantial so that, again, it's something that's meaningful for investors that are doing it. Yes, again, as long as the IRA platform, Dennis, is set up to handle the ACH program, again, we should be able to accommodate that as well. Is the ACH deployed right away or do you hold it? So again, with the ACH program, I believe we're going to try to make it immediate deployment so that you're not going into a queue for small amounts. It's similar to a reinvestment like the DRIP program. Again, I think if the amounts are much larger, then we'd have to consider how that would be done. But again, for amounts of 10, 25,000, those would be expected to go in immediately. So Mar, so if interest rates go up, then your return should also go up. Will the preferred return for lending fund increase? So again, there's always an opportunity, the same way it was changed down, to go upward. I would say we don't necessarily need to change the preferred return as long as the increase in the overall return, right? It's going to continue to get paid out monthly. So again, our expectation is that, again, we're not going to be very different from the returns we have now. It's just, again, that distribution between the preferred return and the excess that gets paid out in the middle of the month. All right, John, if we decide to move funds from the lending fund to a new fund, will we need to declare investments to be taxed or all rolled over to the new account? So again, it technically would be a redemption and reinvestment into the new account. So there may be some tax consequence there. The IRS restricts IRA investments to realize which funds are safe and which ones are more risky. So good question on safe and risky, right? So the only fund that we guaranteed is the positive note fund. Outside of that, all of the funds are investments in alternative assets. We do feel good about all of the investments, but again, the returns are structured based on what you would presume are safer assets. Now, you could argue, as Don said, that the preferred credit fund might have even safer assets, even despite it's paying a slightly higher return. But again, if you think about the loan to value in these funds, right, and how much equity is behind them, you can make that assessment on risk. But we look at it, and we've never had a loss within any of the funds to any of our investors, and continue to expect that to be the case. And will we have to use bank wires at all from this point on with the new ACH program? So if you're making a new investment outside of the auto ACH program, yes, wires will continue to be the norm. However, if you are on the program and using ACH, then no, the wires will not be required. So again, Karen, you're asking if we're going with non-ACH funds, those continue to go into deployment queue. So again, if you're at the $500,000 minimum, again, those would be expected to be in queue. For investments of $1 million or more, those will actually go into a capital call structure. Steve, are preferred returns subject to change at any time for any reason? So again, they can change. Again, the preferred returns right now, again, the only one that has changed from a preferred return standpoint is the lending fund. And again, that change is to that 8%. And again, Steve, if that's something you're not comfortable with or not happy about, right? I mean, the beauty of the lending fund is you have the option to redeem out. You can always go into another fund or take the funds out entirely. But again, we do expect that we'll continue to hit the returns that we've been hitting in the past. The incoming growth fund has not changed, Andy. And Amar, can we reinvest half our investment to another fund, say 50% of our lending fund to housing fund or credit fund? Absolutely. Yes, you can. Any other questions? I'm not seeing any other questions online. I'll give it another minute. Otherwise, Larry, myself, the rest of the team, we're happy to take any questions, happy to schedule time to talk through the new funds, any of the changes to the existing funds. Again, all of the information will be uploaded into our investor portal where you'll have access. We'll send you the link to be able to access all of the information. So Peter, why close the income and growth fund? So reality, Peter, is that the preferred credit fund is really replacing the income and growth fund. That is going to be sort of the new income and growth fund, the way it's structured, the way it's going to perform. So again, the income and growth fund is still in existence. It's just not accepting any new investments in it. So what is the current average lending for lending to deploy? So right now, I'd say the average has been running around 21 days. So again, it's been fairly quick. We've had a very robust pipeline, have had record months and record quarters. So the deployment has been, again, probably on the shorter end of the average. Andrew, if you were reinvesting in the housing fund, would it be treated as an immediate investment? Yes. All of our DRIP program, if you're reinvesting Your distributions are immediate reinvestments. They do not go in a queue or anything else. They just continue to compound. So if you redeploy from lending fund to housing or credit, do you have to wait another 6 months for it to be deployed, even though you were to invest it? So the answer is yes, you do have to await deployment. However, our expectation isn't that it would take 6 months. Even the housing fund pretty much has been deploying within 30 to 60 days. It's been very quick. In fact, we've had a huge acquisition that we did, over 500 million. So most of those funds were deployed and looking good. All right. Is Fidelity the broker for the 2 new funds like it is for the lending fund? So currently the 2 new funds are not on either Fidelity or Schwab. Our intent is to get them onto those platforms the way the lending fund and the housing fund are. And you're welcome, Fed. Are K1s in the 2 new funds versus the lending fund, which is 1099? Correct. That is the case. And again, when we send out the fund comparison, the beauty of the comparison, and I would urge you all to take a look at it, is it's going to have each fund side by side, and you'll be able to see the returns side by side, the tax reporting side by side, everything, again, comparing one fund to the other. A very nice tool that I think would be very helpful for everyone. So Dennis, the intent is not to close out the income and growth fund with the existing assets. It'll just wind down on its own naturally right now is the intent. Are the new funds officially opening starting tomorrow, Kareem? Great question. Yes. So again, we will start taking commitments into those funds. Thank you. So an investor has to start. So we do not have an investor who has started yet. So as soon as we do, we will start that process. All right. So the only 1099 is the lending fund, Greg. All the other funds are K1s. Oh, you know what? That is not the case. The positive note fund is a 1099 also. So I stand corrected. I just corrected myself. The preferred credit fund, the housing fund, and building community fund are K1s. The positive note fund and lending fund are 1099. So S. David Gilbert, give myself or Larry a call. Larry will put his information in the chat box, or you can call our main line and speak to one of our other investor success managers. They will help you manage your investments, get them on the Fidelity platform. Will minimums still apply if we're in other funds already? Yes, the minimums for new investments will apply. But you will be able to break those up. So the overall minimum is 500,000, but you will be able to put in the minimum for an individual fund would be 200,000. So you will still be able to break them up between funds. And again, if you have funds invested already, that'll count towards it. Are the building projects planned already for the housing fund? So the Building Communities Fund is the fund that'll be doing the ground up construction, and there are opportunities in the hopper. The housing fund, again, continues to buy value add income producing properties. And again, we just completed that $534 million acquisition, and we have more in the pipeline that we're getting ready to close. So we will continue to acquire properties into the housing fund and build properties into the Building Communities Fund. So Kareen asking about Fidelity. So no special relationship outside of the fact that if you are a Fidelity account holder or a Charles Schwab account holder, and there's a few others, you can invest directly into our funds off of your existing account. And you're welcome, Dennis. Any other questions? We appreciate everyone staying on with us. I know it's a late night, but again, very important. Want to make sure that you're getting your questions answered and the information is being disseminated. And again, even after this call, we will be available. So just reach out to us with any other questions, and happy to hop on the horn and make sure we get your questions answered. Can we elaborate how QBI tax rate deduction works? Surely. So again, think of it as a 20% tax rate deduction. So maybe to make the example easiest, let's say you're a high, earner and taxpayer. So I'll make the math easy. If you're at 40% tax rate, a 20% deduction would be 8%. So that would bring that down to 32%. And Peter, in an IRA, transferring out of income and growth into pref has no tax consequences. There may, well, from a transfer standpoint, I would believe in an IRA, because you're going from just one qualified account to another, there should not be a tax consequence as long as you keep it within the qualified account. Bill Morris, will the equity targets for the preferred fund be similar for the lending fund? So by equity targets, I presume that you are referring to the LTVs and LTCs. Again, the loan to values overall will be in the same range that they have been for the lending fund. They might be slightly higher, but just marginally for the preferred credit fund. Yes. Barry, our attorney, would be very proud of you, Larry. Make sure everyone checks with your CPA and your tax advisor for all of your individual investment options and questions. All right, so 6:51. I'll give it another minute, see if anyone has any lingering questions. Otherwise, we will be wrapping up. And again, Kyle, our man at the helm inside the dinner, just posted. We do have a keynote speech coming up from JJ Burden. So again, we know there's still over 100 of you on here, and would urge you to listen to the story. It's a phenomenal story. He's a great speaker, and we wish you were here live with us to hear it. But again, we're going to stream it out so that everyone can enjoy it at home. What's the liquidity of the credit and housing fund compared to the lending fund? So both the credit and lending fund, the preferred credit fund and lending fund, will have 90-day redemption. So again, you will be able to redeem out at any time with 90 days notice. And again, you've probably heard us all say this, myself, Larry, the rest of the team, we've never taken 90 days to redeem anyone out of those funds. We've never taken 60 days to redeem anyone out of those funds. The housing fund and the business communities fund will have annual redemption. So again, the way the housing fund works typically is after year end, we get all of the appraisals on the underlying properties. We go through the valuation process. We have the auditors review all of that information. So it is a lengthy process. So typically that takes us through March. Once that valuation is complete, we then open up the redemption window, and we would expect that that's going to be, call it mid-March to the end of April. So call it about a 45-day window. During that window, anyone in those funds can redeem in whole or in part. So again, you have annual liquidity in the housing fund and business, the building communities fund, and then you have 90-day liquidity within the lending fund and preferred credit fund. Tim Becker, how much equity is typically ahead of the pref equity investments? Really depends on sizing of the loans. So again, we expect that there's going to still be a substantial amount of equity invested, both from the borrower side of the equation and then our own investments as well at pref equity. All right. And Kyle, is the expectation that JJ Burden is coming on at 7 p.m.? Is that the correct time?
That's right.
Larry says yes. So, all right. So 5 more minutes. I'm happy to keep this open for a few more minutes, and then we'll turn it back over to Kyle to go live inside the ballroom for the keynote speech with JJ Burden. Any other questions, anyone? All right, if we don't have any other questions, want to just thank you all again for joining us this evening. If you have questions, feel free, please reach out to Larry, one of the ISMs, myself. I'm happy to answer any questions you have. And for Matt and Kristen, I will call you. Thank you for your messages. Any other questions or anyone else have anything else they want to go over before we hop off? All right, Kyle, how are you doing in there? Everything almost ready for JJ Burden?
We're going to go ahead and jump to video, and then we're going to introduce JJ in just 4 minutes.
Excellent. Beautiful. So sounds great, Larry. Thank you very much. Everyone, thank you. I hope everyone has a blessed evening. We appreciate all of the time you spent with us. Larry's contact information, he's going to put it in here now in the chat box. But we appreciate the time, appreciate your partnership. We look forward to continuing to work with you, and hope everyone has a beautiful and blessed evening. Thank you.
We've all got 2 wolves in us, a good one and a bad one, and they both want to eat. The best I can tell, we just got to feed that good one a little more than the other one. Happiness is an emotional response to an outcome. If I win, I will be happy. If I don't, I won't. It's an if-then, cause and effect, quid pro quo standard that we cannot sustain because we immediately raise it every time we attain it. You see, happiness demands a certain outcome. It is result reliant. And I say, if happiness is what you're after, then you're going to be let down frequently, and you're going to be unhappy much of your time. Joy, though, joy is a different thing. It's something else. Joy is not a choice. It's not a response to some result. It's a constant. Joy is the feeling that we have from doing what we are fashioned to do, no matter the outcome. Now, personally, as an actor, I started enjoying my work and literally being more happy when I stopped trying to make the daily labor a means to a certain end. For example, I need this film to be a box office success. You know, I need my performance to be acknowledged. I need the respect of my peers. All those are reasonable aspirations, but the truth is, as soon as the work, the daily making of the movie, the doing of the deed became the reward in itself for me, I got more box office, more accolades and respect than I ever had before. See, joy is always in process. It's under construction. It is in constant approach, alive and well in the doing of what we're fashioned to do and enjoying it. Now, the easiest way to dissect success is through gratitude. Giving thanks for that which we do have, for what is working. Appreciating the simple things we sometimes take for granted. We give thanks for these things, and that gratitude reciprocates, creating more to be thankful for. It's really simple, and it works. Now, I'm not saying be in denial of your failures. No, we can learn from them too, but only if we look at them constructively, as a means to reveal what we are good at, what we can get better at, what we do succeed at. All right, life's a verb. We try our best, we don't always do our best. And since we are the architects of our own lives, let's study the habits, the practices, the routines that we have that lead to and feed our success, our joy, our honest pain, our laughter, our earned tears. Let's dissect that and give thanks for those things. And when we do that, guess what happens? We get better at them, and we have more to dissect. It's a get rich quick on the internet, richest 15 minutes of fame world that we live in, and we see it every day. But we all want to succeed, right? So the question that we got to ask ourselves is what success is to us, what success is to you. Is it more money? That's fine. I got nothing against money. Maybe it's a healthy family. Maybe it's a happy marriage. Maybe it's to help others, to be famous, to be spiritually sound, to leave the world a little bit better place than you found it. Continue to ask yourself that question. Now, your answer may change over time, and that's fine. But do yourself this favor. Whatever your answer is, don't choose anything that will jeopardize your soul. Prioritize who you are, who you want to be, and don't spend time with anything that antagonizes your character. Don't drink the Kool-Aid, man. It tastes sweet, but you will get cavities tomorrow, all right? Life is not a popularity contest. Be brave, take the hill, but first answer that question, what's my hill? Well, for me, it's a measurement of 5 things. We got fatherhood. We got being a good husband. We got my health, mind, body, and spirit. We got career, and we got friendships. These are what's important to me in my life right now. Because I want to keep all 5 in healthy shape. And I know that if I don't take care of them, if I don't keep up maintenance on them, one of them is going to get weak, man. It's going to dip too deep into the debit section. It's going to go bankrupt. It's going to get sick, die even. So first, we have to define success for ourselves. And then we have to put in the work to maintain it. Take that daily tally. Tend our garden. Keep the things that are important to us in good shape. Defining ourselves by what we are not is the first step that leads us to really knowing who we are. You know that group of friends that you hang out with that they really might not bring out the best in you? You know, they gossip too much, or they're kind of shady. They really aren't going to be there for you in a pinch. Or how about that bar that we keep going to that we always seem to have the worst hangover from? Or that computer screen, right? That computer screen that keeps giving us an excuse not to get out of the house and engage with the world and get some real human interaction. Or how about that food that we keep eating, the stuff that tastes so good going down, makes us feel like crap the next week, we feel lethargic and we keep putting on weight? Well, those people, those places, those things, stop giving them your time and energy. Just don't go there. I mean, put them down. And when you do this, when you do put them down, when you quit going there, and you quit giving them your time, you inadvertently find yourself spending more time and in more places that are healthy for you, that bring you more joy. Why? Because you just eliminated the who's, the where's, the what's, and the when's that were keeping you from your identity. Like, trust me, too many options, I promise you this, too many options will make a tyrant of us all. All right, so get rid of the excess, the wasted time. Decrease your options. If you do this, you will have accidentally, almost innocently, put in front of you what is important to you by process of elimination. Knowing who we are is hard. It's hard. So give yourself a break. Eliminate who you are not first, and you're going to find yourself where you need to be. Make voluntary obligations. I'm talking about the ones that we make with ourselves, with our God, with our own consciousness. I'm talking about the you versus you obligations. We have to have them. Now again, these are not societal laws and expectations that we acknowledge and endow for anyone other than ourselves. These are faith-based obligations that we make on our own. These are not the lowered insurance rates for a good driving record. You will not be fined or put in jail if you do not gratify these obligations I speak of. No one else governs these but you. They are your secrets with yourself, your own private counsel, personal protocols. And while nobody throws you a party when you abide by them, no one's going to arrest you when you break them either, except yourself. An honest man's pillow is his peace of mind. And when you lay down on that pillow at night, no matter who's in your bed, we all sleep alone. These are your personal Jiminy Crickets, and there are not enough cops in the entire world to police them. It's on you. It's on you. We do our best when our destinations are beyond the measurement, when our reach continually exceeds our grasp, and when we have immortal finish lines. And when we do this, the race is never over. The journey has no port. The adventure never ends because we are always on the way. So do this, and let somebody else come up and tap you on the shoulder and say, hey, you scored. Let them run up and tap you on the shoulder and say, man, you won. Let them come tell you, you can go home now. Let them say, I love you too. Let them say, thank you. Take the lid off the man-made roofs that we put above ourselves and always play like an underdog. We've all got two wolves in us, a good one and a bad one, and they both want to eat. The best I can tell, we just got to feed that good one a little more than the other one. Happiness is an emotional response to an outcome. If I win, I will be happy. If I don't, I won't. It's an if-then, cause and effect, quid pro quo standard that we cannot sustain because we immediately raise it every time we attain it. You see, happiness demands a certain outcome. It is result reliant. And I say if happiness is what you're after, then you're going to be let down frequently, and you're going to be unhappy much of your time. Joy, though, joy is a different thing. It's something else. Joy is not a choice. It's not a response to some result. It's a constant. Joy is the feeling that we have from doing what we are fashioned to do, no matter the outcome. Now, personally, as an actor, I started enjoying my work and literally being more happy when I stopped trying to make the daily labor a means to a certain end. For example, I need this film to be a box office success. I need my performance to be acknowledged. I need the respect of my peers. All those are reasonable aspirations, but the truth is, as soon as the work, the daily making of the movie, the doing of the deed became the reward in itself for me, I got more box office, more accolades and respect than I ever had before. See, joy is always in process. It's under construction. It is in constant.
Kyle, are we ready back there? So we still have well over 100 people online. So they've been participating this kind of the whole time. They just did a lot of Q&A. So I get to introduce JJ Burden. JJ was told from 2 or 3, 4 or 5 years old when he started playing sports, you're too small. You're not good enough. You can't make it. Okay, that's what he was told. And he persevered. He's a product of perseverance, dedication, and hard work. He ended up playing 9 years in the NFL. And he's, 5'8". She's short. He never, wasn't, they always said he wasn't big and wasn't strong enough, but he proved them wrong. He's an amazing author, motivational speaker, and you were about to hear him. He's doing a lot with his community too. Very famous person. But we're going to start off with a video. If we could start the video, and right after the video, if we could all put our hands together, and then JJ's hopefully comes running out here as fast as he can.
Y'all ready for this? Hey. That was a little choppy, wasn't it, huh? That's all right. It works. Still, though, every time I see my highlights, I have like two different reactions. One is, did I really used to do that? And the other one is, man, you crazy. I can't believe you used to do that. So, it was the 1993 season for the Kansas City Chiefs. There was a lot of anticipation going into that season because why? We just had a pretty good year. We were 10-6, made it to the playoffs. But it was during the offseason, some pretty special things took place. We added two very special players. One, number 32, Marcus Allen. Anybody remember Marcus Allen? Oh yeah. Then of course, number 19, the great Joe Montana. I can still remember the very first game, first huddle, we're in Tampa Bay. And we're waiting for Joe to enter the huddle to give us the play. Here he comes. All right, guys, here. You guys ready? This is gonna be a great year. Hold up, JJ, at some point, we're gonna call XNZ post. When I call that post route, you better fly, because I'm going to launch it. As soon as he said that, it was like my heart kind of jumped out of my chest for a second. And for that very moment, I started questioning my abilities. What if I mess up? What if I drop the ball? I'm not Jerry Rice. I mean, can I really raise the level of my performance to play with one of the greatest quarterbacks to ever play the game? One of my goals today is to perhaps help you deal with a moment like that. Maybe a moment where you're filled with fear, doubt, questioning your abilities, worried about uncertainty and other things that have been taking place maybe over the last year and a half. Or perhaps you're someone who's sitting there right now blowing up your business, but you're trying to figure out, can I really take my business to the next level? Can I raise my performance? See, as a motivational, inspirational speaker, I make it clear right up front. I'm not here to tell you how to do your job, but I am here to motivate you to do more, to be more, and to achieve more. But at the same time, I want to empower you with simple success tips and strategies so that you're always performing at the highest level. So you are the best of the best at what you do and what you pursue. Because I know a little something about being the best in the world at my job. Let's take the NFL. No matter what you think about it, the NFL is the #1 grossing sport in the world. It does about 16, 17 billion in annual sales. But think about this simple little game where we're punting and catching and throwing this little leather ball. There's millions of people that are playing this game all over the world. the highest level is the NFL. There's no other level to graduate to. There's no Emperor League you go to afterwards or the Ambassador League. No, it's the NFL. And with millions of people playing it around the world, every year there's 1,696 men who are on an active NFL roster. 1,696. And I was one of those for 9 years. There's 30, thank you. There's 32 NFL teams. Each team will start 2 wide receivers. I was a wide receiver. My job was to catch the ball. That means every year there's 64 job openings to be a starting wide receiver in the NFL. And I held that position for 5 years. What's the point? The point is you don't make it to the NFL by accident. Doesn't matter who you know, who's in your network, what family you're born into. You make it because you earn it. And you stay there because you continue to earn it. So for me, it was that journey to the NFL. It was a time that I spent in the NFL. I learned some pretty valuable success principles, some winning strategies that allowed me to make that transition to life after the game and continue to perform at a high level as an athlete entrepreneur. Now, the game, though, taught me a lot, really did. The game taught me how to grow, how to improve, how to deal with change, how to handle success, competition, how to deal with adversity, especially when things are going well. Let me illustrate it this way. So I've been married to my college sweetheart, Raina, for 31 years now. Thank you. Matter of fact, let's make her nervous. Everybody look that way. She's back there. So when we got married, we had one simple goal when it came to having a family. We wanted 3 children. Less than that, not enough. More than that to me, we wanted 3. So on the left, we have Dante, Camille, and LeJordan. 15 years ago, I got a call from my nephew, Justin, in Tulsa, Oklahoma. Justin says, "Uncle, there's craziness going on out here. You need to come check on us." So 24 hours later, I'm on a plane heading out to Tulsa. 24 hours later after that, I'm in a courthouse standing before the judge, and the judge says, "Mr. Burden, we're going to take your 5 nieces and nephews and place them in 5 separate foster homes. You're the next of kin. What would you like to do?" I was like, "I'm just here to check on the children." But I did what any smart husband would do. I was like, "Judge, let me call my wife first." But after a 5-minute conversation, we took all 5 of those children and merged them into our family immediately. And when we did it, so many people questioned us. Why would you do that? Why would you add 5 more mouths to feed? My wife and I ran it. We saw it as an opportunity to impact 5 more lives. And I believe we've done that, but I also believe they've impacted us as well. But this was a major curveball for us. This was unexpected. How do we treat it? Every day's game day. That's how we treated it. So one of the principles I learned about the NFL was that every day you brought your best. You had to bring your best. Game day wasn't just on Sunday. It was Monday through Sunday. Meetings, practice, film session, whatever you did, you had to bring your best. Because if you didn't, there was some guy waiting for you to mess up and take your job. That was how we approached our family, doing our best for them. How do you do every day? You treat every day like game day? Or do you just take a couple days off and wait for a reason to give your best? When I was in the NFL, we had a habit of labeling our coaches. We call them theory coaches and player coaches. The theory coaches were the coaches who played high school football. They played college football, but they never played in the NFL. So they didn't really know what it was like to play in that game where you're going against some of the most amazing athletes in the world. They were great coaches, don't get me wrong, and I learned a lot from them. But the player coaches had a competitive advantage because they knew what it was like. And the difference between high school and college and pro, it's the speed of the game. It is so much faster. And I share that with you because I'm not just an athlete. When I retired, I immediately dove into the business world. I wanted to be a business owner. And for years, I ran several different companies, 2 medical-based companies in Kansas City. I was a part owner and West Coast sales manager of a fitness equipment company. In Atlanta, I worked with 150 exercise equipment stores. And then I ran a free camp in Northeast Portland, went back home and gave back to the kids because I could never go to any camps when I was a kid because I couldn't afford them. So we had a free camp, had 1,000 kids there. I loved what I was doing, but I felt I had more to offer. I wanted to impact a broader audience, not just stay in one little sector. And that's why I became a speaker and became an author, because I wanted to offer more to those I had an opportunity to communicate with. But what's cool, though, is I've been in both worlds, the athletic world and the business world. And there's a lot of similarities between the two. I mean, obviously, there's one big difference. I'm no longer running from someone who's 300 pounds and trying to take my head off anymore. But in sports, it's your physical attributes that determine your success. They want to know, how fast are you in the 40? What's your quickness like in the drills? How high can you jump? How strong are you? And you might have the most incredible athletic abilities, but they may not still bring you on. You don't control the odds. In business world, we control the odds because it's based on our effort and our commitment. And that's something we control. It's our responsibility when it comes to the effort we give every single day to do our jobs. But here's what I need to ask you, though, first. How many of you have ever had a conversation, a real serious conversation with a professional athlete? Anybody ever sat down and really got to pick their brain? We got a couple of them. I'm asking because if you do, you kind of find out we're a bit of a different breed, but you understand how we're able to reach certain levels. Here's what I want you to remember. When I was in high school, my coaches would say, JJ, just work 2 times as hard as your competitors. Outwork the competition. You'll always win on game day. So that was the approach I took. I said, no one's going to outwork me. It worked in high school. It worked in college. It didn't work in the NFL because everybody was a great athlete. Everybody was putting in 2 times the effort. So after my first year in the NFL, I realized the parity. So I had to look for those 1% incremental improvements in my game. Little tweaks here, there, constantly trying to make these improvements. And that was the difference between whether you played in the game on Sunday or you watched the game from your sofa on Sunday. And I'm encouraging this for all of you because when you're a speaker like me who's from another profession and they have the success, you're trying to find that little bitty success tip, that little bitty nugget, that little improvement that could be the difference to achieving what you want as you close out the year and you go into next year. Now, it takes a commitment to be able to do this. All right, and we understand the word commitment. It's a vow, it's a promise, something that we want to really try to achieve. And I realize that some of you have already been here at the event. You've already taken in some information. Some of you just got here. Well, let me add this. I believe the results you get out of anything is based on 2 things. If you show up and how you show up. So everybody that's here, you get a gold star. You showed up. And everyone listening, you get one too. But how did you show up? What's your thought process? What's your attitude? What's your intentions? What do you want to get out of this event? As you have this brain power around you and you have the opportunity to learn and engage and network. You sitting up? You listening? Because I should share something that impacts you in some kind of positive way. And I realize this is a business building event, but what I'm going to share can also be applied in your business life, your family life, and your personal life. And I think that's important because when you're winning in one, you can be winning in the other because we're all trying to find that work-life balance, right? All right, so what I'm going to be sharing with you is what I call my 7 key strategies to seize your opportunities. Because in life, we all have opportunities. We have goals, we have dreams. You guys obviously have certain opportunities and things you want to achieve in the business world. Maybe some of you are trying to step up your game. Maybe some of you are trying to scale your business, grow your business. Whatever the opportunity is, I'm going to share some simple tips. And I just want you to think about, where could I apply that? Is that something I'm doing? Is that something I'm struggling with? And it doesn't matter who you are in this room, there's something here for everyone. So let's start with this first one. You have to get your head in the game. You got to get your head in the game. I think this is one of the most perfect metaphors for life because every day mentally, we're either in the game, leading the charge, or on the sideline, whining and complaining about our circumstances. And I had coaches who say this all the time. And what they were saying was, JJ, you have to mentally prepare yourself for the journey you're about to take on, the goals you're about to pursue. I mean, for all of you, you can kind of look at this event as it's launching your new season. It's like your new season. And I don't know about you, but every year I went into training camp, a new season, I never went in with the attitude, well, I'm going to just do what I did last year. No, it was, how can I be better than I was the year before? Where can I grow? Where can I make improvements? And I saw a lot of professional athletes, amazing athletes, buckle because mentally they weren't strong enough, because they weren't used to having to fight for their position, sit on the bench, deal with injuries, because they were always the star in high school and college. And a lot of them just checked out mentally, and they took themselves out of the game. And we all know success is 90% of what happens right between your ears. So this is all about mindset. That's what we're talking about. Mindset. How you think, what you think truly does matter. And it's a critical point because one small idea, one small thought in any given situation, it can take you that way or take you that way. There is no in between. You either have the right mindset or you don't. And as humans, we battle with self-doubt, fear, negative thinking, self-limiting beliefs. And sometimes we allow outside influences dictate our performance and our effort. So here's what I need you to focus on. There's two types of mindsets you want to be aware of. Which one are you? There's the fixed mindset and there's the growth mindset. Fixed mindset is basically someone who feels that their traits, their abilities, their qualities cannot be changed. They're fixed. And they're not willing to put in the effort to make improvements, to grow, to excel. They just figure, I'm good. Growth mindset, just the opposite. These ones believe they can get better, they can grow, and they will put in the work to do so. And studies show that people that have a growth mindset, they naturally foster qualities like grit, determination, resilience, and they have a work ethic that cannot be matched. So the quick fix to make sure you have a growth mindset, as I say, adopt a positive mindset. Because people who have a positive mindset, they have a competitive advantage because they're always in control mentally. Nothing tends to rattle them when things are happening around them. You know, you wake up every day, it's like, I don't care what happened yesterday, it's a new day, let's go. You see the new opportunities from day to day in spite of what happened the day before. You see the bright side of everything. Something negative happened, what's the bright side? What's the positive side? You expect the best to happen, and you look at challenges as blessings in disguise. Because when there's a challenge, there's always an opportunity to learn. And the last one, you see these moments as opportunities. Understand this, the mental part I'm discussing first because it's the most important. And if you monitor your thoughts every day, you'd be surprised at how many negative thoughts pop up in your head. If you can work to remove those, you're in more control mentally. Because if you want more positive results in your life, you got to adopt a positive mindset. Because a positive mindset separates the best from the rest. I am the poster child of this topic. That's why I'm talking about it. This is the number one question I'm asked about my 9-year NFL career. How in the world did you play 9 years at 5'10", 157 pounds? I was one of the lightest players in the last 30-something years in the NFL. They would list me in the program at 180 pounds. My coach would say, I don't want them to know how small you really are. But I learned quickly, if you play scared, you run a lot faster. But seriously, how? The NFL is 100 years old. There's 20,000 men who've played the game during that time. The average NFL career is less than 2 years, and the average size NFL player is 6'2", 245 pounds. Have you ever wanted something, wanted to achieve something? Maybe you've got some big outlandish goals that you're going after to close out the year or going into 2022. Maybe some of you are wondering, man, what are the odds of me really stepping up my performance, building my business to where I need to? Maybe there's others who don't believe in you and question your intentions. I want to read something to you quickly in my book, The Forward. It was written by Al Saunders. Al Saunders was my wide receiver coach with the Chiefs. And Al's been a coach for 50 years. He's evaluated thousands and thousands of wide receivers. This is what he said when he first saw me. On the surface, J.J. Burden appeared to have no chance whatsoever to make the team's final roster. A camp guy, said the scouting department. Someone to run pass routes in training camp to give the veterans a break and keep them fresh. He has track speed, quickness, and maybe he can give the defensive back some good work in practice. So I was just another body. I was a camp guy. Got anybody ever question you, challenge you? Got any dream stealers you know about? One of the things I've learned in my journey is that we are going to run across or come across dream stealers, naysayers, doubters, negative Nellies. But here's the tip. Not everybody's going to understand the journey and the choices we make, and that's okay. But it's important that we understand it and we believe it. And one thing they can't measure is they can't measure heart. They can't measure how bad we really want it. And that's what they couldn't do with me because I had a burning desire to make it. Do you have a burning desire to achieve what you want the rest of this year, next year? I had a burning desire to change my circumstances. I was raised in Portland, Oregon, Northeast Portland in the hood. And we struggled growing up. I made up my mind early on I wasn't going to struggle. I'm breaking this cycle. I want to see the world. I'm leaving the hood. I don't want to stay here. That was a decision I made. And that's what was driving me. And that when you have a burning desire, it resonates with you from head to toe. It's in your gut. It's all you think about and it drives you every single day. And it's what we call your why. Your why is probably understanding your why is probably one of the most popular success training tips that are being taught throughout the world. Whatever you're doing, you have to know why you are doing it. That's about your motivation, your seed of motivation. Just because, or I don't know, is only going to take you so far. Because when life gets tough and you have those wall-kicking moments, it's so easy to quit and give up on your dreams and give up on your goals. If I asked you right now, it's a rhetorical question. Do you know why you do what you do? Maybe some of you want to build something more significant. Why do you want to build that? Maybe some of you want to leave a legacy. Why do you want to? Maybe some of you want to make a bigger impact. Why do you want to do that? Let me illustrate it this way. So there's a speaker out there named Bob Schmidt. I love how he describes it. He says, what if I had a plank that was a foot wide, 20 feet long, and I sat it on 2 bricks, foot off the ground, and I offered you $20. Would you walk that plank? Yeah, easy money. But then he says, what if I took the plank and I suspended it between 2 buildings 100 stories high? I offered you $20. Would you walk the plank? Nobody's going to do that. But then he says, what if your kid was on the side of one of the buildings and the building was on fire and flames were licking at the back of the neck of your child? Now would you walk the plank? What's the difference? The reason, the motivation. Don't care about their life. The $20, it's about saving the child. You see, when you've got a why that's so compelling, you will do whatever it takes. You know how many times I was in a game? So I'm a wide receiver. I'm 157 pounds, and they call X crackback. That means I got to run down there and hit the linebacker. And I look down there, I see 260 pounds Junior Seau, who's 100 pounds bigger than me. I don't have time to sit there and go, dang, Junior's arms are kind of big. I think he's got muscles in his cheek. No, I would strap it up and I'd run down there and boom, and hit Junior as hard as I could. Now, he wouldn't move at all. But the point is, when you saw the film the next day, you saw little 88 sprinting down there to do his job. Because of that why, to change my circumstances. That's what was driving me. So no matter who you are and what you're pursuing, don't underestimate this point. It's so important. And if you're not sure how to find your why, here's a quick tip. We call this peeling the onion. So an onion has multiple layers. You got to keep peeling the layers to get to the core. I was in Chicago 3 years ago, and I was speaking to a woman, and she said, "Hey, JJ, you got any tips on, I want to lose some weight. I want to get healthy." And I said, "Well, why do you want to get healthy?" She said, "Because I want to be able to play with my daughter." I said, "Well, why do you want to play with your daughter?" I said, "Because I can't get on the ground and play with her." I said, "Why do you want to do that?" And she said, "Because I want to be around." I said, "What do you mean?" She said, "My mom died of obesity when I was a child, and I want to be around for her wedding." And I said, "Bingo." I said, "There's your why." When you don't want to follow your program, when you want to quit, when you give up, you read that. That's what's going to keep you on track. But did you see what we did? So you have to kind of keep asking the question, why is that important? Why is that important? It might take 3 or 5 times, but you eventually get to the core. And when you get to that why, when the why is strong enough, the process to get there is not a challenge. Nothing will stop you, but you have to take the time to find it. And it's got to be emotional. It's got to hit you here. It's got to hit you there. Because you want to make sure no fear, no doubt, no one's opinion, no excuse in your head will stop you from achieving what you want. Because it's going to be tested. Your why is going to be tested. This is an acronym I came up with a couple years ago. I called it FASCO. Because I would use these words at different parts of my presentation. They all have different meanings, but I said, sometimes we could just lump them in one category. Failures, adversities, setbacks, challenges, and obstacles. It's when something unexpected happens that you're not prepared for. Something that's blocking you from achieving a goal. Maybe a difficulty arises, a struggle, a letdown, rejection. It's something that's testing you to see how bad do you want it. Think about what you want to achieve in your businesses this year and next year. Do you kind of want it? Or do you know you want it? How bad do you want it? I'm going to share with you quickly. I didn't turn my phone off and my dad's calling. I'm going to share quickly with you just my journey to the NFL. And because you saw the highlights and they say you see the glory, but you don't know the story. But I'm going to share this quick story here. But as I share this, I want you to think about yourself. How do you deal with bad days, bad weeks, months, bad years? How do you deal with just when things are just not going right? What are the habits in terms of how you respond? And then also think about, would you had quit? You know what I'm talking about. So I went to the University of Oregon on a track scholarship. They said I was too small in high school, so I had no football teams would offer me a scholarship. So I went to the University of Oregon on a track scholarship. And my second year, I started secretly watching the football practices because I wanted to see if the players are really that much bigger than me. And I decided that, no, I can play college football. I just got to create the opportunity. So I started going to practice, and then I stood on the field one day and waited for the coach to see me. And the head coach, Rich Brooks, he saw me one day. He comes down to the field. He says, "Burden, you're the track kid. Why are you out here?" I said, "Coach, I want to play." He goes, I said, "No, Coach, I want to play." I went on and on and on, and he had me come to his office the next day, and he says, "Okay, we're going to let you walk on." If anyone doesn't know what walk on means, that means that they're going to give you a tryout. There's no guarantee. You don't get a scholarship. You're just going to try out. Now, the very first day, I go to fall camp, practice. There's 15 wide receivers on the depth chart. I'm number 14. Have you ever been in a situation where it appears that the odds were against you and you start thinking, that's a waste of my time. Why am I doing this? They're not going to give me a shot. Here's how high performers think. How fast can I move up the depth chart? That was my mentality. And it wasn't about being cocky. It was about I knew what I was capable of, and they didn't know what I was willing to sacrifice to get it as far as a work ethic. 2 weeks later, I was backing up 2 seniors. So I made the team. They switched my scholarship over, which was cool. Wasn't thinking about the NFL. So the next 4 years, I ran track, I did football, and then I graduated. One day out of the blue, I got a call from the Cleveland Browns. Head coach Marty Schottenheimer, hey kid, we just drafted you in the 8th round. And I was like, who is this? Is this some kind of joke? Because I didn't have a really good college career. I had 1 touchdown. But they drafted me, so I thought, well, let me go check out the Cleveland Browns rookie camp next week. I was in the middle of my senior track season. I won nationals. I was getting ready for the Olympic trials. I qualified in the long jump. So I go out to the Browns camp. The 3rd practice, I tear up my ACL ligament. So track is over. So I shifted to, well, let's see what happens in the NFL. So that next year, I went through training camp. I was about 80%. But they cut me at the end of camp. They said I was right on the bubble, but they cut me. The next day, I got a call from the Chiefs. So I fly out to Kansas City, and the head coach, Marty Schottenheimer's like, you had a great workout. We want to sign you. But we're going to put you on the practice squad. Every NFL team has 10 practice players, and at some point, they play. Well, while Marty's saying that, the Detroit Lions are on the phone. They're like, no, we want to play you this Sunday. So Marty says, hey, you go to the Lions because they're going to play you. But if they try to put you on their practice squad, you come back and be on my practice squad. And I said, deal. So I fly out to Detroit, and the first thing you have to do is take a physical. And I've got some swelling in my knee. So the doctor flunks me on the physical. And while he flunks me on the physical, Green Bay calls and said, we'll take him. So I fly out to Green Bay. By the time I get there, they've heard I flunked the Lions physical, so they flunked me on the physical. Well, I still have the Chiefs. So I fly back to Kansas City. By this time, they've heard I flunked 2 NFL physicals, so they flunked me on the physical. Think about your worst week, where everything that could possibly goes wrong, back to back to back, goes wrong. What does that look like for you? How do you respond when that happens? I just went back to work. A couple weeks later, I get a call from the Dallas Cowboys, and they put me on the practice squad. And they're like, we're going to play you at some point. I'm there the whole year. I don't play in a game. And when the season's over, Jimmy Johnson says, kid, I don't think you're made for the NFL. You should go do something else. Now, I don't know who remembers how bad Dallas Cowboys were in 1989. We were like 1-15. I was like, I'm out of here. You guys are never going to win a Super Bowl. I leave and they win 3 Super Bowls. The point is, I didn't quit. I didn't give up. I didn't start making excuses. I just went back to work. But here's what I'm trying to get at. In life, when you deal with FASCO moments in your business or whatever, failures, adversities, setbacks, challenges, and opportunities, these are some of the best opportunities for breakthroughs. Breakthroughs is when you experience an impactful jump or a quantum leap. Something amazing happens in your business or your life because you make a choice. And that day I made a choice because that moment could either take me down and out or it could take me to bigger and better things. I decided that was going to be the moment. That would be the moment I would be talking about 27 years later. Remember when? But in order to grow from these moments, you have to be teachable. You have to be humble. You have to be willing to learn. And these are some great moments to have that mentoring moment. Because every time when you fail in life, business, whatever it is, there's always something you can learn. There's always an opportunity to grow. And the questions I always ask is, why did this happen? What can I learn from it? And how can I turn this experience into an opportunity? That's a growth mindset. Instead of like blaming whoever, but looking in the mirror and holding ourselves accountable. So I reviewed that and I thought, you know what? There's a reason why I did not make the Cleveland Browns. And I didn't want to admit it. I'm going to try to illustrate it to you this way. So this is what we call special teams. This is kickoff coverage. This is where the guys run down the field and they tackle the guy. I've never done this. But my last game with the Cleveland Browns, there was 3 wide receivers. They were trying to decide which 2 they were going to keep. So they put us all here at R2. That guy's job is to sprint down the field as fast as possible. I can do that. And he's supposed to make a tackle. Okay. But when you get down there, there's 4 guys who form a wedge that weigh about 300 pounds. My job was to be the wedge buster. Are you catching the visual here? 157 pounds. So I'm like sprinting down the field. I look like Usain Bolt. I'm like the first one down there, but I hit that wall and boom, I was on my back. And then I would do it again. Fast, going down or looking good, hit the wall, boom, on my back. We had a saying in the NFL, it was the eye in the sky does not lie. They film everything. So right before I got to the wedge, you'd see me freeze up. I was afraid. I did not want to hit those guys. And I asked myself, if you want to play in the NFL, you got to be willing to do that. And I made that pact with myself that I was going to do whatever it took. Kansas City Chiefs called. I made the team, and the rest is history. But did you catch the 1 point back at Oregon? Did you catch what I said there? Oregon did not recruit me. They didn't ask me to play football. I went to them. I created that opportunity. Here's the point you got to understand. Sometimes in life, you got to create opportunities where it appears none exists. Create opportunities where it appears none exists. I created that. I went on to play 9 years in the NFL because of something I went and made happen. So when you think about your business, maybe there's someone you want to work with. Maybe there's something you want to do. You have to figure out a way to get noticed, to get your foot in the door, to set up that meeting. When you do that, unexpected doorways can definitely open up. And that's what happened with me. But success is intentional. This was all planned out. I came up with that plan back in the 12th grade. So my question to you, as you're striving to hit whatever goal it is you want this year, what's your game plan? What's the strategy you have in place? Has it hit development mode? Is there any structure there? And I ask because often when I sit down with people and they have these big goals, there's no strategy. They're just kind of out there winging it. When there's a true commitment to a goal, there's a game plan written down somewhere. We had game plans every single week, and we changed it from week to week based on who we were playing. The game plan for the Raiders was different than the game plan for the Dolphins. It was different from the game plans for the Chargers because there was a new goal every single week. I put this one in here because this is one of my favorite quotes. The enemy of success is disorganization. The enemy, what works against you having the year you want, closing out the way you want, having a 2020, how organized are you? Let's take it a step further. What is your daily method of operation? What's your daily method of operation? When you go to work, do you have like certain activities you do from day to day? Because in the NFL, we had a daily method of operation. And every NFL team did the same thing. We went in early, we had weights, special teams meeting, team meeting, pre-practice meeting, practice, post-practice film session meeting. We watched the practice we just had, go home, study plays, study your opponent on film. That was our daily method of operation. And every NFL team still does that today because it's a successful routine. Let's narrow it down to 5, because John Maxwell, who's a leadership trainer, he says that everyone in business, to be successful, you should have a rule of 5. He says there's 5 fundamental things you should be doing every single day. He calls it a system to succeed. Do you know what your 5 are? Do you sit down at work and just kind of guess, oh, I'm going to try this, I'm going to do that, or do you have something that you do from day to day? I was a wide receiver. My job, of course, was to catch a ball. But there were 5 fundamental things I did every day to make sure I was in a position to be successful on Sunday. Took care of my body, I catch balls, I study plays, I run routes, and I study film. Those are the 5 fundamental things I would do every single day during the season. And it made a difference on how I played on Sunday. Let's expand this to another area. I am 56 years old. And when I retired, I made a pact with my doc that I was going to continue to work out and try to live a healthy lifestyle because I'm losing a lot of my team members right now, unfortunately. There's 5 fundamental things I do every single day to live a healthy lifestyle. I call it WIS. I work out, I drink 88 ounces of water a day, half my body weight. I eat relatively healthy, I supplement, shakes, bars, and all that, and then I try to get 7 to 8 hours of sleep a day. Those are the 5 fundamental things. What I'm emphasizing is you can apply this in any area of your life. But you want to have something, because if you don't, you could be wasting idle time, and not being as productive as you want to be. Leonardo da Vinci says that simplicity is the ultimate sophistication. Simplicity is the ultimate sophistication. Often, sometimes, we complicate the process of success. We make it more difficult than it really should be. We need just a simple little system or something that we can follow and that we can duplicate and teach others. Here's something I've used most of my career. Simple. Create a plan, review the plan, execute the plan. Simple, easy. 1991, I was with the Kansas City Chiefs. It was my fourth year in the league. And I had a really good first year with them, and I thought, man, I'm going to play a lot this year. This is the year. But they drafted some players, and so they got to play more than me. Most people in a situation like that, when you're at work, or maybe something's not going in the way you want it to go, what do? They start complaining. It can kind of become a cancer to the team. I came up with this plan. I said, you know what? I'm going to come to practice every single day because I'm on the team. Every day is going to be my game day. I'm going to work hard. I'm going to make my team members better. Because you know what happens after practice? We all watch the practice film together as a team. Then we leave, and then the owners and the VPs and vice presidents, they all watch us on film. I said, I'm going to force them to have to put me in the game because they're going to be talking about me in practice every day. That was the mindset, and that was the game plan, and that was the ultimate goal. Again, when you're creating a plan, you've got to figure out what are the action steps, what are the tasks, what are the activities you need to do in order to achieve it. Then you got to review the plan. And when I say review the plan, I'm really talking about find a mentor, find a coach, a teacher, someone who's already walked the road that you're traveling on, someone who's already achieved a level of success. When you can find someone who's leading from the front, they can definitely cut down your inevitable learning curve of growth. And I sought out Tony Dungy. Everybody remember Tony Dungy? Yeah. And I said, Tony, here's my goal. And Tony said, that's a really good goal. But remember, the best ability a player can have is availability. He said, take care of your body. And I was like, thanks for that reminder. And I want you guys to understand that, because I know we have probably some very successful people and doing really well with your job. And I just want you to think about this. You think about all the athletes in the world, the greatest athletes, Wayne Gretzky, Michael Jordan, you name them. What do they all have in common? They all have coaches. They all have mentors. They all have accountability partners. Don't ever think you're too successful or you've achieved so much that you don't need help. Don't be afraid to ask for help, because there's always an opportunity to learn from someone else. The last one is execute the plan. And we all know anybody can create a plan. Anyone can review a plan, but the people who really want it are going to execute it. Not only execute it, but execute it when life is throwing you curveballs. So that was my plan. I went into the season, week 3, practicing really hard. Week 4, week 5, week 6, going as hard as I can every day. Week 7, week 8, nobody's saying anything. Success is an endurance race, right? It does not happen overnight. Week 9, week 10, week 11, week 12, 13, 14, 15, 16, 17. Finally, wide receiver coach says, man, you've had a great year. We've decided we're going to play you a lot this weekend against the Raiders. Take advantage of it. We played the Raiders. I had 8 catches, 188 yards, 2 touchdowns of 52 yards, and 57 yards. If you don't know NFL stats, that's a good day at the office. But because of that simple plan I executed, they no longer saw me as a backup. That's when they started talking about me becoming a starter. And I started for the rest of my career just because I implemented a simple plan and I stuck to it. And that's the point. Finding a plan that produces the results you want, and if it does, you stick with it. But you got to be willing to do the work. A lot of people want it, but not everybody's willing to do what it takes. And this is what one of my coaches would say, blah, 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 do the work. It's his way of saying, I don't want to hear any excuses. I don't want to hear why you didn't do this. Do the work. Because if you do the work, the results are going to take care of itself. But sometimes what happens is we can fall into this entitlement syndrome. Because maybe we've been successful in something else. Maybe we had a great year, a great month, a great week, and then we just expect things to happen automatically. But we know that doesn't work. When I got to the NFL, I was considered a world-class long jumper. I long jumped 26.2. And I measured that. That's about here to the wall. Not a lot of humans can jump 26.2, you know. But you know, when I got to the NFL, you know what they said? So what? Prove you deserve to be here. And you had to quickly forget about what you did in the past and earn it every single day. So my challenge to all of you is that when I say do the work, what kind of work are you doing? Because what I see a lot of people, they forget about the basics. They stop working on the basics, the fundamentals. And I know there's many fundamental things and basic skills that many of you have to, demonstrate in order to be successful. But what tends to happen is people get comfortable and they stop putting in the work, working on the basics. When I got to the NFL, my first year, I didn't say, well, hey, I've been catching the ball since I was 15. I don't need to keep working on it. Or my 9th year, I didn't say, no. Every day I would catch hundreds and hundreds of passes, working on the basics, how to catch a football. How much time do you put in working on the basics? How much time do you work on something like communication? Communication is very key to what you do in your business. You're communicating with a lot of people. Not everybody's a great communicator. But do you spend time working on developing and perfect and mastering your communication skills? Because that's what it's all about. And mastery is all about practice. You got to be willing to practice. You got to be willing to put in the work to master those skills. But when you master them, you continue to refine them and you continue to work on them. And it takes a lot of this to be able to do it. This is one of my favorite words of success, discipline. This is how I describe it. Because if the doorway here leaves you having a great year, a great 2022, that's the master key to success. Discipline is the ability to do what you need to do when you need to do it while no one is watching. As a pro, that was automatic. I didn't need someone reminding me, study film, run your routes, do these things. No, that's what you do automatically to be the best and stay the best. I'm 6 years old. What was I doing last night? Practicing this presentation. What was I doing this morning? Practicing this presentation, because those habits will stay with you no matter what you are doing. How do you do in this area? Somebody got to remind you, do this, do that over and over. There's so many distractions out there right now, everyone. I mean, we got so many things pulling and grabbing and competing for our attention. And we all have goals and dreams and things we want to achieve. You have to be able to protect your focus. I mean, one of the reasons why I loved running hurdles, also ran hurdles at Oregon, because when you got into the blocks, it was you versus 3 guys here, 4 guys there, and there would be 10 obstacles you're looking at. And my job was to conquer each obstacle one at a time. As a young hurdler, I would get distracted in the race. I run over a hurdle, I look left. I run over a hurdle, I look right. I was not locked in on my lane. And this happened to me more than once. But as I got more experience, as I listened to my coaches and executed what they were teaching me, I got much better. I was able to lock in on my lane. In life, in your pursuits, are you distracted? Are you allowing things to pull your attention, to knock you off course? Look at his eyes. Look at his eyes. Is he distracted? No. He's got laser-like focus on his goal. And that's what we have to do. Now, I got a little better. This is my senior year, but I had to show you the Jerry curl. Check it out. My kids love that shot. But here's what I need everyone to think about. I need you to protect your focus. Protect your focus like $1 million suitcase. If you had $1 million in a suitcase, how would you treat that suitcase? You're walking through the airport, we hold this, I'm going to the bathroom. You wouldn't do that. You would protect it because you know the value of what's in that suitcase. That's how you have to be with your focus from day to day as you're pursuing what's important to you. You got to protect your focus because when you protect it, think about how many more lives you could change, you could impact. Think about the significance you could leave as you continue to build your business. Now, I had to talk about him a little bit before I got out of here because the thing about playing with Joe Montana is that I used to watch him in the 8th grade. So it kind of freaked me out when he joined our team. I remember the very first huddle. We were in Kansas City, first practice. I was in the huddle and I was like, that's Joe Montana. I couldn't get over it. But that first practice, I learned something quickly about him. Because the very first play we ran was called X-Hut, me. 12 yards, turn around. I've done this route forever. I can do it in my sleep. So I line up and I run 12 yards, but right when I get to 10, boom, he hits me in the back of the head with the ball. And I was like, Joe, and he goes, come here, kid. He said, I've already read the defense. I know where the hole is. I throw it before you get open, so you got to get your head around faster. You know how many quarterbacks I played with who would wait until you're open and then throw it? Joe had anticipated, so you had to get your head around faster. It was a little point, but it made my game better. And the thing that I was impressed about Joe after that, because Joe had played 14 seasons, he had won 4 Super Bowls, he had all these accolades. So when he joined our team, I'm thinking like, what's Joe gonna be like? Is he gonna rest on his laurels? Is he gonna really do something? What is he going to do? Joe came in, he studied like a rookie, he prepared like a veteran, and he led like a pro. He was the consummate leader, and he produced what I call the Montana effect. Because we were already good. But as soon as he joined our team, we went right to the AFC Championship game, one game before the Super Bowl. And his leadership was key to making that happen. And there were so many things that impressed me, and I could talk about his preparation, his precision, how methodical he was, how he never gave up. But the thing that impressed me the most was this one. Joe, in spite of all his accolades, when he joined our team, he still had that hunger, he still had that drive. It did not matter what he did before. He was still trying to get better. And as I mentioned earlier, sometimes we might have a great week, a great month, a great year. We may rest a little bit, kick back a little bit. Even though you're winning, sometimes complacency can cause you to lose. And what I liked about Joe is his mentality was, what's next? How can I keep challenging myself, raising the bar? And that's what I would encourage all of you. Whatever the goal and dream you're going after, when you achieve it, you say, what's next? And you raise that bar just a little bit higher. Not too high, not too low, but knowing that if I put a little bit of extra work, I could achieve that. And you know you have the right goal. When you think about achieving it, it gives you chills down your spine. Keep asking yourself, what's next? Don't let complacency work against you. So what have we talked about? We talked about mindset. How you think, what you think, it matters. We talked about your why. And here's another side point. Your why will change from time to time. What was motivating you 10 years ago or 15 years ago or last week might not be what's motivating you today. So you have to do why checkups from time to time. I mean, 4 years ago, 3 of my children got married in 1 year. What do you think was driving me? My youngest just moved out. Now it's just my wife and I. The why has changed. So you have to do why checkups from time to time. Always have a game plan. Don't be afraid to have a mentor or a coach or accountability partner. And tell you what, find someone who will tell you what you don't want to hear, but what you need to hear. Because feedback, that's the breakfast of champions. Champions eat up feedback because they know it'll make them better. And do the work, fast go, and then stay focused. And I chose all these points for you because how we do anything is how we do everything. You can't think that if there's something that you want to achieve that's maybe not as important, and you show a lack of commitment, a lack of focus, a lack of grit, a lack of discipline, and then all of a sudden you get something that's really huge that you really want, that you can just flip a switch and all the perfect qualities are going to come on. In times of stress, we revert back to form. We revert back to our habits. So it's creating habits that stay with you no matter what. All right, so let's go back to this slide. And I have this at the end for a reason. Because you come to events like this and you hear some good stuff and you get fired up. You write notes, oh, this is good, this is good. And you're like, I'm gonna blow up my business. I'm gonna go change the world. Oh yeah. You get home and then life gets in the way. And you go back to maybe the habits that weren't serving you the way you want. So please remember or write this definition down. Commitment is doing the things you said you're going to do in the mood you said it in when it has passed. Doing the things you said you're going to do, you said in the mood when it has passed. Because excitement is great. Enthusiasm is fantastic. But execution is everything. Make sure you go home and execute. All right, let's wrap this up. So here we go. So back to the huddle. So I'm having my little panic attack and I'm all nervous and doing all that. And then I was like, dude, snap out of it. You've been preparing for this moment your whole life. Just get out there and do your job. So I get on the line. I line up. Remember, Martin Mayhew's covering me. Ball snap. I give it a little move. Boom. I take off upfield. And I'm going full speed. And I look up about 30 yards and oh my goodness, here it comes. And he launched it. So I hit another gear and I take off. And right at the goal line, I put my fingertips out and I catch it on my fingertips and I score my first touchdown from Joe Montana. And I spiked that ball so hard because it was my way of saying for everyone who said I was too small, I didn't belong, every setback, every adversity, everyone who was against me, I just scored a 52-yard touchdown from one of the greatest quarterbacks to ever play the game. So my challenge to all of you is simply this. You attack every day with passion, with purpose, with power. You do that, you'll seize the opportunities that are waiting for you. But more importantly, you win, your family wins, your company wins, your customer wins, your community wins, everybody wins. Thank you and enjoy the rest of your event.
Thank you, JJ. JJ, that was awesome. JJ, will you hang around for if people want to ask questions and stuff? Okay. So JJ's gonna hang around. Wonderful. There is dessert on the table. We're gonna be hanging out. So thank you everyone for coming. I know we have a big day tomorrow for most of us, but thank you. And give it up one more time for JJ Burton. Can we put on a little music? Can we put on some music, please? Thanks, everybody.